So we are all pursuing sharing of knowledge and learning. So blessing of Saraswati Ma is very important for all of us. So and this is a perfect day for knowledge sharing, and it can't get better with our own members presenting a learning session, a knowledge sharing session, analysis of tax provisions of union budget in this month's Adda Advantage. So we are keeping to our promise of having one session every month. We as chartered accountants, every year budget is an important event in our lives. Be it we are in practice or in profession, it is important, and we look for fine prints and read between the lines to plan for our accounting and tax. So while this year it may appear that there are not many changes in the tax provisions, but I am sure as we go through this session, we'll realize it is not so true. There are a lot of provisions and some of them are draconian. So decode the fine print and to interpret the changes, we have experts Bikash Bogi and Narendra Pati, our own members, to present to us their analysis and implications on individuals and businesses. The session will be moderated by our own member Vikas Khanna. So we look forward to an interesting session and answers to loads of questions that we will have. While we have over last 5 days, we would have gone through lots of presentations, must have read the budget provisions. So and I'm sure we will find answers to a lot of the questions, and some would still remain unanswered as we go along. So may I now request our young core committee member Rohan to introduce the speakers, and thereafter Vikas can take over the session. Let's have a nice evening and take benefit from this knowledge learning session. Over to you, Rohan.
Thank you so much, Neeraj. Hello, everyone. I hope everybody is doing well. I'll not take a lot of time. I'll just quickly introduce our two speakers today. First up would be Bikash Bogi. Because he's basically a fellow member of ICAI, just like all of us. He's also a company secretary and a qualified law graduate as well. He co-founded the CA firm by the name of SBR and Company, Chartered Accountants, which within the last decade or so has already expanded to over 5 offices across India with 50 plus staff overall. Moreover, apart from Indian clients, SBR also boasts of MNC clients and in fact clients who are not even stationary in India. So basically clients outside India as well. Now, having more than 12 years of practical experience on the technical nuances of income tax matters, including international taxation, FEMA, tax litigation, cross-border structuring, M&A advisory, and advisory related to other allied laws, because regularly represents the clients before various revenue authorities and courts across India. In fact, his firm also caters to some of the biggest corporate houses and MNCs in India. Apart from his practice of CA, Bikash is a strong believer in sharing his knowledge and helping the overall profession of CA, towards which in fact he has taken practical steps, amongst which would be he often writes articles on taxation which gets published in various professional magazines and websites, and he also often speaks at various public and private forums, including the ICAI sponsored programs on tax related topics. He has also been associated with Gitanjali Express since the last 8 years, is a life member of Gitanjali Express, and is currently also acting as the treasurer of the group. Apart from that, he is a member of the Bombay Chartered Accountants Society, the Chamber of Tax Consultants, and All India Federation of Tax Practitioners, and member of various ICAI study circles. So that's Bikash Bogi for you. The next guy would be Narendra Pati. Narendra Pati, now, I find it very interesting. Narendra Pati is a CA, of course. He's also an LLB. He did his business management from ICFI. But interestingly enough, he's a BSc in science, a Bachelor's of Science. So that sets him apart. He's also, in fact, pursued IFRS course from ICWAI. Having more than 30 years of experience in indirect tax field, in corporates as well as consulting, he has got very grounded and very deep expertise in GST, central exercise, customs, income tax, transfer pricing, service tax, VAT, foreign trade policy, and numerous other state levies, right? He has in fact also helped companies deal with investigating agencies like DRI, DGCE, Special Audit, etc. Mr. Narendra is also a member of the Indirect Tax Committee of IMC Chambers of Commerce and has published numerous articles in various journals, including Tax Planning International by Bloomberg, Excise Law Times, Business Today, Tax India Online, Lexology, Journals of Chamber of Tax Consultants, and such so many more. Mr. Pati has also addressed various seminars organized by commerce like ASSOCHAM, PhD Chamber of Commerce of Delhi, Infrastructure Edge, Indian Merchant Chambers, of course, Indian Institute of Cost Accountants of India, and ICI. He advises many national and international corporates, including, and the list is long, kindly bear with me, Reliance Industries, HDFC Bank, Harvard University, Hindalco, Yes Bank, M&M, Aditya Birla Insurance, Brookfield, HDFC Securities, HDB Financial, Poonawalla Finance, Imagica, India Bulls, Leela Hotel, Ambience Hotel, Mahindra Steel, Reliance ADAG Group, Mahindra Intertrade, Mahindra MSTC, Reserve Bank, Angel Broking, Epic Games, Service Monkey, and so many more. So I welcome you all to this very engaging session and wish both the participants all the very best. Thank you. Mr. Vikas.
Thanks, Rohan. Thanks for that lovely introduction, and welcome all fellow members of Gitanjali, and wish you a very happy Saraswati Puja. It's a very auspicious day, and on this auspicious day, we have two very lovely and renowned speakers out here to share their knowledge with us. Indeed, it's a pleasure to have both these speakers from within our family, and I'm sure we have many more pearls who are there in our Gitanjali family, who are who are still undiscovered, and there are not only pearls, the diamonds also among ourselves. But I won't this session is on taxation, and as we know that if I'm sure many of us would know that there is our Albert Einstein said that the hardest thing in the world, which is difficult to understand, is the income tax itself. So you can understand what challenges lie ahead for both our speakers if Albert Einstein found income tax to understand difficult. So it's a very difficult task for our speakers, both the speakers, Bikash Bogi and Narendra Pati, to explain the provisions of income tax as well as indirect taxation. And Mark Twain also said, it's tax is a fine for doing well. And I'm sure many of us would agree with that as well, because when it comes to payment of taxes, we find it very difficult. But then to conclude it, I think what takes it away is the quote by Benjamin Franklin, wherein he said, "Not in this world, nothing can be said to be certain except debt and taxes." So with these very words, I hand over and I ask Mr. Bikash Bogi to begin the session and enrich our fellow members with his analysis of direct taxes. Mr. Bogi, over to you.
Thank you, Vikasji, for your introduction. Thank you, Rohan, for my brief introduction. Yes. Shall I start?
Yes, please.
Yes, Vikas.
Yes. So good evening, everyone. I hope all of you are doing good and best of your health. So happy Saraswati Puja to everyone. First of all, I would like to thank all the core committee members of Gitanjali Express to give me an opportunity to share my thoughts on tax provisions of Union Budget. It's my honor to present my view before all the members, and I thank all of members who has joined the meeting. So, Honorable Madam Finance Minister Nirmala Sitharaman has presented her fourth union budget this time, and this budget speech was probably the shortest budget speech of finance minister in last couple of years. So I thought, okay, since this budget speech is very short, so there may be a less amendment or less changes in the tax provisions. But when I read the fine print of the memorandum and finance bill, then I find it's not the short changes. There are more than 80 amendments in direct taxes, and out of which many amendments have made retrospectively. So before start of my session, I would like to raise a very important query. Why government is bringing amendments in every budget, lots of amendment in every budget? So there is a specific reason behind this query, amendment, and my fellow professional colleagues are somehow involved in it. So what happens, say, in earlier years, finance minister presents a budget and they bring certain amendment, and as per the interpretation of the government, say the interpretation of that section is X, and immediately after the budget, our fellow chartered accountant, my professional colleagues interpret those sections, and they interpret those sections as interpretation Y. And what they did, they advised their client to do that tax treatment as per Y. So when they file the return, department reject their claim and they file an appeal, they go to the court. Then what happened? Court, in many cases, court accept the interpretation taken by the taxpayers. And once the higher courts accept this interpretation, then department understood, अरे ये तो मेरे से गलती हो गई. Then they advise the finance ministry that due to this particular case law, there is a leakage of revenue. So bring certain amendment to reverse those decision of the court. Due to this reason, each year we find lots and lots of amendment overruling lots of lots of high court cases. So this is the reason behind bringing up all these amendments. I personally don't like the retrospective amendment. In 2014, when NDA government took charge, it professed minimum government, maximum governance, and ease of doing business, along with the need for a fair and stable taxation regime. In their first budget speech of NDA government, late Arun Jaitley has, in the first budget speech, he himself said that this government does not support any retrospective amendment in tax law. It was way back in 2014. But this NDA government, in mostly in last 7 to 8 years, if we see the budget, we have find out that they bring many retrospective amendment. In fact, in this year also, they have bring 14 retrospective amendments. So in overall, in totality, whatever amendments government has bring, majority of the amendments are going to increase the tax revenue of the government, and many of the amendments are in procedural in nature. So I will, since I have a very limited time, so I will try to cover important sections first. And if anyone is having any query related to those sections, they can ask their query after my session. Rohan, can you confirm me? Is my screen is visible?
Yes, it is. It is.
Yes, sir. So I will start my first topic, which I am covering, is virtual digital asset. So in last couple of months, we Indians are crazy about three things: COVID, Neeraj Chopra, and cryptocurrency, Bitcoin. So when as per the data available with the in the public domain, it has been said that we Indians have invested more than 1 lakh crore in bitcoins, and someone given this data to finance minister, and the finance minister said then why these investors have all the fun. So they bring up with, and there was lots of hue and cry regarding government is going to legalize, government is going to ban this cryptocurrency and all this, and so, and there was lots of speculation about what they are going to do. So honorable finance minister put all the speculation to an end and bring up an amendment taxing virtual digital asset. It is not crypto, not only cryptocurrency. If you read the definition, it is virtual digital asset. The definition is very wide. It covers all kind of cryptocurrencies, Bitcoin, as well as other digitally made assets. What the government is saying, government is when the government analyzes this data, government finds that Indians are investing lots of money in bitcoins and crypto. So let's have let's increase our tax revenue by taxing them. And these provisions are drafted in such a meticulous way that anyone making profit on transaction in Bitcoin or crypto, they are going to pay tax at a huge rate, 30% flat tax. And they are not going to allow any kind of deduction or exemption except cost of acquisition. Let me explain you this example. Say my friend Rohan, he is crazy about crypto. He has purchased few Bitcoins worth rupees 1 lakh and he sold those crypto on 11 lakh rupees. So what he has made a profit of rupees 10 lakh. Rohan is not having any other income. And Rohan has made certain investment in ATC, ATD, Mediclaim. So in this case, Rohan's total income is 10 lakh and his only income is income from virtual digital asset crypto. So he is going to pay tax flat 30%. You will not get any benefit of slab benefit, no benefit of slab, no benefit of exemption deduction, no any kind. If you earned any profit, you need to pay tax flat 30%. The only deduction you will get on account of cost of acquisition. One more thing. So if you have made any kind of loss in crypto and if you have any capital gains, so you will not be able to set up those capital loss against your profit from crypto. Or if you have any loss from crypto in a particular financial year, you will not be able to carry forward and set up of those loss with any other income or any year. So if you have loss in crypto, just forget that loss. That loss is a dead loss. So how? So now the question comes is how the government will control these transactions. So they have come up with a TDS mechanism. They have cast the responsibility to the crypto exchange that whenever any Indian will sell virtual digital asset, they need to deduct TDS at the rate of 1% on consideration. If you see my example, the sale consideration was 11 lakhs. So you need to deduct that the crypto exchange need to deduct TDS at the rate of 1%, that is 11,000. And once they deduct the TDS, that amount will fetch in 26 As, and from where they will catch you. If you have not disclosed your income from crypto, they are going to catch you. One important thing. So me and Rohan are good friends. So so Rohan want to gift me some bitcoins. So if Rohan gifts me bitcoin worth rupees 1 lakh, then that amount will be taxed in my hand at 30%. I need to pay 30% on that gift which Rohan has given to me on account of by way of crypto. So this is virtual digital asset, and government want to have fun by taxing this crypto. So let me move to my next slide. Introduction to updated return. This is one of the good amendments that government is bringing in this budget, and this is a kind of income declaration scheme. As per my understanding, it is a kind of income declaration scheme. The only motive in this budget and the tax department to increase their revenue. So government has introduced this concept of updated return. What it says, nowadays, due to the use of technology, government is having all kind of data with them due to data mining, and they have put all the information. They have compiled all the information through your PAN, through your Aadhaar card, and all those financial transactions are stored in your 26AS. All those information are stored in 26AS in the form of AIS. If you see the AIS, all the data is there. Government has recently introduced this scheme. So government has now come with the updated return. So what this concept says, if you missed out to file your tax return, or if you have made certain correction in the tax return, you can file an updated return. This is new concept. You can file an updated return subject to certain conditions. What are those conditions? You can file updated return, but you need to pay additional tax. What is the additional tax? Say for financial year 2021, the last date of tax filing and original return as well as revised return is 31st March 2022. So what the government says, you can file updated return within 24 months from the end of the assessment year. So end of the assessment year is 31st March 2022. So you can file updated return till 31st March 2024. But what are the additional tax? You need to pay additional 25% tax if you are filing updated return within first 12 months. And if you're filing updated return after 12 months, then you need to pay additional tax at the rate 50%. Like your normal tax liability is say 100 rupees, you need to pay 100 rupees plus 50 rupees. Government has introduced two specific sections. One is for filing of this return, one is for payment of this specific tax. And if you are not paying additional taxes, then you are not allowed to file this updated return. You cannot reduce your income, you cannot increase your losses, or you cannot claim any benefit which result in reducing of income. If you want to file updated return, just pay the tax and get relaxed. What are those benefits for filing of updated return? Say you have not filed your tax return and your case selected for scrutiny, then you need to pay tax plus interest, plus they will start penalty proceeding against you, as well as in case there is escapement of rupees 1 lakh or more, they will start prosecution proceeding against you. So instead of that, they are giving this option to just pay the tax and be relaxed. But in all the cases, you will not be allowed to file updated return. What are those cases where you cannot allow to file the tax updated return? When you had already filed the updated return, like for one assessment year, you can file one return, one updated return. Assessment for that particular year is already completed. If there is a search, seizure, requisition or prosecution has been initiated or communicated, in case of any reopenings in any cases, or there is a loss, or there is if it is a result in refund or decrease of tax liability, then you cannot file updated return. But this is a welcome move by the government, and it will help genuine taxpayers to save from penalty and prosecution, and it will help government also to increase their tax revenue to be a very large extent. So this is a welcome amendment made by this budget. So the next amendment is cash credit. This is one of the draconian amendment I personally feel that they have made in this budget, and this amendment is going to impact SME or startups badly. So what is section 68? Section 68 says if any sum found credited in your books of accounts and you offer no explanation, or the explanation offered by you is not satisfactory, then that amount shall be treated as your income. That's fine. So what is the problem? So through this budget amendment, they have made certain changes. What are those changes? Let me explain you with an example. Say I'm planning to set up one startup. So I'm in need of money. So I told my friend Rohan that Rohan, I need 25 lakh rupees as a loan. So please give me the loan. I want to set up. I want to start my setup. Rohan, give me 25 lakh rupees. I started my setup. Say after 1 year, my case has been selected for scrutiny. Since I've taken the loan from Rohan, apart from the basic information, PAN card, Aadhaar card, ITR, and everything, I need to give, I need to explain, I need to explain to the income tax authority that from where Rohan has get this 25 lakh rupees, source of source. For SME and startups, it is first of all, it is very difficult to get the loan. आपको कोई पैसा नहीं देगा. And if you are able to get the loan, then आप बोलेंगे यार तुमने पैसा कहाँ से लाया तुम बताओ, तो मतलब it is going to be very difficult. And if you read the bare language of the finance bill, it says that only two cases they have given exclusion, like SEBI regulated venture capital fund or some fund registered with SEBI. So if I go by the language of the finance bill, if I take a loan from NBFC or Federal Commercial Bank, as per the current provision, they are going to ask me, okay, you tell me where this NBFC has sourced this money. So this is, I think, this is some issue in drafting, and most probably ICI will give their proposed budget memorandum to clarify these things, and I hope government will listen to this, because what happened in this case, basically in India, 1% or 2% people are doing in this indulge activity, hawala or the entries things, and for plugging those 1 or 2%, government is bringing certain law which is making inconvenience to rest 98%. This is wrong. Genuine cases will suffer due to this amendment. So we hope good sense will prevail and government will do certain clarification regarding this, so that at least SME or MS startups, genuine entities does not get affected due to this thing. The next amendment is relief related to COVID. So this is a very welcome amendment by the finance minister, and last year in the month of June, government is bring certain ordinance regarding various expenditure or amount incurred by various person in companies towards COVID related treatment or family members of the deceased persons. So through this amendment, now the government has regularized all those things. So what is this provision? So it says that if any person receives any money for the treatment of COVID or treatment of his family member, employee has received money from his employer for his treatment of COVID or treatment or his treatment or treatment of his family member, then that amount shall not be treated as perquisites in the hand of employee. Further, if that person receives any money from any other person towards treatment of COVID, then also that amount shall not be treated as gift or income in the hand of the recipient. Subsequently, if that person dies and the employee gives any amount to the family member of the deceased employee, that amount shall not be treated as income in the hand of recipient family member. But this payment should be made within 12 months from the date of death. Further, if any person receives any money from a third party, family of where the person has been died due to COVID and someone else has given them the money to the deceased family members. In that case, if the amount is up to rupees 10 lakh, if the amount is up to rupees 10 lakh, then it will be exempt in the hand of recipient. Now I'm very surprised that why the government is given a cap of 10 lakh. If I read the bare provision, bare reading of the finance bill, say if anyone has given to any family member rupees 11 lakh and prima facie reading of the finance bill says that entire 11 lakh is going to be taxed in this case. So I think it should be. It seems that there is some drafting error or some clarity needs in this provision. So hopefully, in the post-budget memorandum, finance minister will take care of these things. Yes, this is one interesting amendment. I hope most of the member will able to correlate the thing. Earlier, there was one provision through which various investors used to avoid the tax. What was that? It is called dividend and bonus stripping. So what is bonus stripping? Say I purchased share of a particular company 3 months before the record date. Record date is a date when a company declares dividend or a bonus announcement of bonus shares. So I purchased the shares of that company 3 months before the record date, and I sold those shares after the record date. So what at after, since company has declared the bonus shares, so the price of the share, if it is 1 to 1, the price of the share is going to be 50% immediately after the record date. So these investors, what they were doing, so they were selling the original shares immediately after the record date and book the loss on original shares and keep the bonus share with them and set up these losses with their other capital gains. To plug these loopholes, government is bringing certain amendments in section 94, subsection 7 and 8, which is called dividend and bonus stripping. So after introduction of these sections, there were certain additional investment instruments came into picture, like infrastructure investment trust, InvIT, real estate investment trust, REIT, or alternative investment funds, AIF. So earlier, these dividend and bonus stripping were applicable to the units of shares and securities. Now, government has come up with this amendment, and now they are saying that this amendment will applicable to all the units of InvIT, REIT, and AIF. So government is trying to plug this loophole by bringing this amendment. Government has withdrawn certain deductions and says, so there are 4 things. So I will explain one by one. First thing is related to retrospective amendment in section 14A. Section 14A is a celebrity section. Why I called it a celebrity? Because in India, wherever there is assessment, you will find a common addition in all the cases. There is addition of section 14A. And this addition is not a small additions in all the corporates. It is a huge amount, more than crores and so. So what is this section 14A? Section 14A says that if you have earned any exempt income, and if you have incurred any expenditure for earning that exempt income,
नहीं था सीक्वेंस है
hello, Yeah, so if you have earned any if you earned any exempt income and if you incurred any expenditure for earning that income, then that expenditure is going to be disallowed. That's fine. But in many cases, they find that actual amount of expenditure is calculation of actual amount of expenditure is very tough. So what they have did, they have come out with a rule 8DD, where they said if you have not incurred any direct expenditure, you need to calculate the disallowance by way of this rule 8DD. And what was the impact of rule 8DD? Say in case of a company where they have received a dividend income, exempt income of rupees 10,000 rupees. But in the assessment, assessing officer is making addition of 5 crore, 10 crore, 20 crore, or so on, so huge amount of additions. And the SACH went to the appeals and tribunals and our higher forums, and they say that this addition is not justified. So higher courts has given a view that this addition on this account is not justified. If you want to make an addition, that addition should be limited to your exempt income. So like in my example, if you had earned exempt income of 10,000, then your disallowance should be restricted to 10,000 only. You cannot disallow 10 crore or 5 crore or so. So once the decision of the higher courts came, then CBDT awakes. Then they find that yeah, we are losing the tax revenue due to these high court decisions. So they come up with finance ministry, and then they say, okay, please bring certain amendments so that we can increase our tax revenue. So now they've come with this amendment and saying, okay, even if you have incurred any income or not, it does not matter. Disallowance under section 14A shall be made. So in nutshell, they have reversed the decision of higher courts. I hope I'm clear. So now I'm coming to the next point. This is related to section 43B. Section 43, what section 43B says is certain deductions are allowed on actual payment basis. Like if you have made the provision in your books of account on 31st March, and if you have not made those payments before the date of filing of return, then you need to disallow those expenditure in your computation of income. So there was one item, interest on loan. What many corporates did, they have taken huge loan from the bank, and due to liquidity crunch, they were not able to pay the interest amount. So as per certain RBI circulars, they have converted their loan into debenture or term loan or something. And few of my professional colleagues have advised them that if you converted your interest amount into a certain loan amount, then it will be treated as discharge of liability. Department had objected this argument once again, and SSC went to the appeals and higher courts. Higher courts has accepted the argument of the taxpayer. Then again the department awakes, and they go to ministry and says this court has given these decisions and we are losing the revenue. Then the finance minister come up with this amendment, and this amendment says if you have converted your loan amount into interest amount into loan amount, then that shall not be treated as discharge of liability for the purpose of allowance under section 43B. So again, in this amendment, they have reversed the decision of the court. So there is third point. This amendment has been made in section 37. Section 37(1) covers the general deductions, and there are certain one explanation in which they say there are certain expenditure which is not allowed, expenditure which are in capital in nature, expenditure which are in against the offense, or expenditure incurred for protecting any offense or law. So these kind of expenditure were given in that explanation of section 37(1). This amendment is particularly, if anyone from pharma company is there in this in the audience, they should listen it carefully. So many pharma companies are giving various kind of free buys, various kind of benefits to medical practitioners so that their sales increases, and they charge these expenditure like they treat these expenses, sales promotion, marketing expenditure, and various different kind of name. Indian Medical Council has treated this practice of pharma companies as unethical, and they had in their guidelines they have specified that they should stop these kind of practices. So as per explanation, any expenditure incurred in violation of any law or guidelines that should be disallowed. So department has again disputed this claim. SSC has claimed it. Department disputed it. They go to the higher courts, and higher court supports the view of the department, supports the view of the taxpayer by giving a reference of certain earlier some case law or some notification circulars. So then again department come up with this retrospect. They have reversed the decision of this high court, and they say if you have incurred any expenditure which is in violation of any guidelines of any professional organization, so that expenditure will not be allowed as deduction while computing your taxable income. There is one more item. So if you had incurred any expenditure to protect you against the violation of any law, then that shall be disallowed. Again, some of the creative chartered accountants have analyzed this provision like that. They have given the word law, they have not defined the law. So it means if you have incurred any expenditure for offense committed in India, that will be disallowed. But if any offense is committed outside India, then that is going to be allowed. And again, this issue was litigated by the department. High courts have given their decisions, and once the high court has given in favor of the SSC, then finance minister come out with this amendment reversing the decision of the high courts. So this situation, so like in my earlier part, I explained what are the reason for the amendments. Now you can able to correlate the things, why these amendments has come. Again, there is a important thing, and it is a very classic thing. So I'm pretty surprised how chartered accountants are creative and how they advise. Like we all know that income tax is not an allowable expenditure, and if you paid income tax, you need to disallow that amount of income tax. So income tax includes surcharge and education cess. So when this provision was when the surcharge and cess was introduced first time in 2004 and 5, some chartered accountants, and there was earlier one 1962 circular of CBDT. So some chartered accountants have interpreted the thing that it only says tax, it does not include surcharge. So if I paid any amount of surcharge, that is my allowable deduction. They have claimed it in their return of income. Again, department has disputed this claim, and they went to the tribunal and high court. Bombay High Court and Rajasthan High Court has approved the view of the taxpayer that cess is not a tax and you should be allowed a deduction. Then suddenly, then again, the CBDT wakes up and they said that this interpretation is totally wrong. Even I personally feel this interpretation is totally wrong. So they come out with the retrospective amendment, that tax includes surcharge cess, and it always mean that this interpretation, and they bring this amendment retrospective from financial year 2004 and 5. So wherever anyone has taken a relief by way of decision of high court or tribunals or so now they are going to pay tax on that portion. Again, there is one amendment in business reorganization. So the government has come out with a good amendment. I can say these are the good amendments. So many times, like in case of merger demergers, we file up a scheme with NCLT or High Court. So from the date of filing till the date of final order, there is a time gap of 1.5 year or 2 years. So at that time, so if one company merged with another company, so predecessor company, there were certain proceeding in the case of predecessor company which is pending. And when the final order came, then after the court order, the predecessor company ceased to exist and only the resulting company is there. So the courts has taken a view that any proceeding made, any order passed in the name of predecessor company is invalid because that company ceased to exist. That company get merged with another company, and to remove this difficulty, they have come up with this amendment. They said, okay, in case of any proceeding, if it is pending with the predecessor company, and if there are certain reorganization, so after the court order, it will, if any order came, then it will applicable to the resulting company also. There is one more amendment, one good amendment, like in many cases where the companies go to IBC, and when they were in IBC, there are certain tax demand pending in their case. So what they did, so when the NCLT passed the order that now this company will be sold to some other party, but there was previous tax demand. So various forum has represented the government that how we have purchased this company as per the NCLT order, but there are tax demand pending in the case of this company. So how to get rid of it? So government has bring one section 156A, which says that in case of these court proceedings, if court has given the order under IBC or so then the assessing officer is given the power to rectify or reduce or remove those demands which is pending in the name of the earlier company. There is one more amendment, like in the case of we have filed one is our scheme of arrangement with NCLT or courts, and the order has came after 2 years. So till the time the resulting company already filed their returns. So once the order has come, now they need to cover the period which was the pending duration of the proceeding. So how they include those period transaction in their return? They were earlier there was no such provision. So now they have come with a concept of modified return. Earlier we have seen the concept of updated return. Now here they have bring the concept of modified return. They are saying you can modify the return to give effect after the order of the court or the NCLT came, and you can give that order. You can pass the modified return within the prescribed time. There is one more amendment regarding goodwill. So what they are saying, if you are reducing the goodwill from your block of asset, it will be treated as transfer while calculating capital gains. Yes, this is one of the interesting amendments. Reassessment. So earlier, your case can get reopened only due to 2 or 3 things, like if any information flagged in the system, department system, AIS system, then your case can be reopened, or if any objection has been filed by CAG. Only in 2 scenarios your case can get reopened. Earlier this was a provision. Now they have increased the scope of the reassessment. What they said, okay, any information found in accordance with risk management strategy formulated by the CBDT, that should be one part. Second point is any audit objection. Third part, any information received from a foreign jurisdiction as per DTAA section 90 or 90A. Information collected under faceless assessment scheme for specified provisions, and information that require any specific action. If these are the scenario, then your case get reopened. So earlier there was only 2 category, now there are 6 category for reopening. Further, earlier it was the provision that your case can get reopened up to 3 years. Now this criteria of 3 years have gone away. They can reopen your case up to 10 years subject to certain conditions. If department is having any information that, and the value of that information is 50 lakh in respect of, like department is having an information that you have an unaccounted asset worth rupees 50 lakh, or you have done any expenditure, or you have done any transaction to an event or occasion worth rupees 50 lakh and that was not accounted, or an entry in the books of accounts. So what it means, so let me explain you this by one example. So you have you along with your friend has gone to has visited some foreign country and incurred say 1 crore or 2 crore 10 years ago, and the department somehow get this information that you have incurred this amount of expenditure. You have incurred 2 crore rupees, and in that year, if you have filed return of incomes to disclosing income of 5 lakh rupees, then your case is likely to get reopened under this new provision. Or suppose if you have incurred in your marriage or anniversary lavishly 5 crore 10 crore amount, and if your income your taxable income that the return you have filed is not matching with that expenditure, then you are likely to get the notice from tax department. So if you have done any kind of thing, so be ready. Government has given free hand to department to open your case up to 10 years, and now since now this is a law, you cannot do anything. You cannot go for writ or high court or so. So government has given the wide power, very wide power to tax department to reopen your case beyond threshold period. Earlier it was 3 years. Now they go to 10 years. Yes, there is one more important amendment related to search. Earlier, what happened in the case of search, like if there was a search in case of any person, they used to disclose certain income. But what they used to do, if they have certain amount of brought forward loss or unabsorbed depreciation, they used to set up those unabsorbed loss or depreciation with this undisclosed income, the income we disclose, they disclose at the time of search proceeding. So now the government has come up with the amendment that if you have disclosed any income in the search proceeding, you need to pay flat 30% tax on that income. You will not be allowed to set up brought forward loss, set up anything from that income. So what is the meaning of undisclosed income here? So undisclosed income, they have categorized. Undisclosed income means false expenses entry, any money, bullion, jewelry, valuable article or things, any entry in the books of accounts, or other document or transaction which they have found during the course of search. So again, this through this measure, they are going to increase their tax revenue little bit. So now I'm coming to my next amendment. TDS on benefit or perks. So what this? So there is one section 28 subclause 4, which says if during the course of business you are providing any kind of benefit or packages to anyone other than your employee, then that will be the income in the hand of recipient. But normally these kind of income, this kind of like you can given target to your third party that if you made this much of sales, I will give you this amount or say additional incentive, motor car or any foreign trip. So earlier these kind of expenditure, these kind of benefits are not getting reported in the hand of recipient, although there is a specific provision in section in 3CD. So now they have come up with a solution. What is the solution? Now they are saying whoever is providing this benefit to that person, they need to deduct TDS. The moment you deduct TDS, it will get reflected in your 26AS, and if it is reflecting in your 26AS, then you can see, you can track those expenditure. So this amendment they have bring, and this is not applicable to individual on HUF, and this amendment will take effect from 1st July 2022. So these are the broad amendments. There are certain few small amendments. So there is no change in income tax slabs, tax rates. So in case of cooperative society, they've reduced the AMT rates from 18.5% to 15%. Surcharge rate has been reduced from 12% to 7% for cooperative societies. Surcharge on long-term capital gains on any asset capped at 15%. This is a welcome amendment, and this will bring tax rate in case of HNI or HNI or high tax paying individuals. They have given certain tax relief for person and allowed annuity payment to disabled dependent where parents attaining the age of 60 years. NPS deduction in limit is increased to 14% for state government employees. For startups, they have increased the tax holiday for 1 year to setting up the startup and to get to start the production for 1 year. For the appeals, for the reducing of litigation, they have made certain procedural changes. IBC law, they have bring certain amendments that IBC law will be amended to include certain various many things. To reduce the litigation, they have come out with certain kind of directions. And for the faceless assessment regime, they have made drastic changes. So I think I try to cover up many things, try to cover many things. So still there are many amendments which require lots of time, but since I am short of time, so for this I am concluding my presentation. So if you have any queries, they can ask. Thank you.
Thank you so much, Bikash. It's indeed a very informative such presentation. It's personally, I know since I handle taxes as well, it's not very simple to make such a nice presentation in such a short time and such an informative. So, so while there are several questions which are being asked by our members, thing which I personally feel is that though the speech of the finance minister was short and sweet, the provisions which have come up and the tax provisions which is there, the best part of it is that there has been no increase in the corporate taxes or even in personal taxes. So do you not, are you of the view that, this is a positive move in order to attract more investors into India and convey a message to the foreign investors as well as to the entire business community as well as individual community that there is a stability which is there? So what is your view on that?
Yes, I think this is because this is a welcome move that finance minister has not increased the budget and not increased the tax rate. And apart from that, they have increased the capex budget to a certain extent. Even all the industry leaders, including the Deepak Parekh and all other leaders, has praised this budget, and even market has given a thumbs up to this budget that this is a future-worthy budget. That without, if you are not increasing your tax rate. So in the start of my speech, I told that government is bringing certain measures, and once all those measures will get implemented, government will increase their tax collection by at least 20 to 25% just by implementing these things. So finance minister has very smartly did not increase any tax rate, but they increased the taxes on certain items, they increased the scope of the tax even by say by levying tax on bitcoins or crypto. So this is a welcome move, and this gives a very good indication to FIIs and foreign investors that we have a stable tax regime. And even the earlier retrospective amendment which was brought by in 2000 by Pranab Mukherjee, so government has even reduced, so even those cases has been reversed, and now the settlement has been already take place in those cases. So it is a very welcome move by the
absolutely get your point, absolutely. And so therefore, which brings me to the next point, which is like in the sense that you made a very nice point saying that there is not been any increase in cases, but the government has, trying to improve their tax collections.
Yes.
Past, if you recall, most of the experts and the chartered accountant community or the business community, they always had this complaint that the taxes are continuously increasing or they're being changed, the provisions are being changed randomly. And so therefore, what they wanted was a consistency. What they wanted was that there should not be much of a changes. Now, this year, and we have seen a very buoyant year of tax collections, whether it is in indirect taxes or direct taxes. And that's the reason why finance minister has been, she has been very confident of it. Now, over the last year and few years, what we have seen is there is a gradual move towards, incorporating faceless assessments, faceless appeals, digitization, whether it is in the indirect taxes or in income taxes for arena as well. So what I personally feel is probably the government is now trying to focus on the on implementation and real implementation of the laws which are already in place, strengthening the loopholes in law. What's your view on that?
Yes, it definitely.
Tax collection.
Definitely, government is working on faceless, and even everything is going to be faceless very soon. So assessment and appeal is already in faceless, and government will already bring the amendment that IT is also going to be faceless. So motive of the government is very clear, but the point is that execution part, there is a big problem in execution. Even in last 1 year, we have seen that income tax portals has seen lots of problem, and we taxpayer feels lots of pain. So I think this message has gone to the government and finance ministry that the execution part is more important, and gradually whatever steps government has taken, uh, because this is a big country, and setting up that infrastructure, setting up mindset. Now at earlier, all the people, all the officers were used to do one-to-one assessment. Now everything is faceless, and they are not used to of it. So it is going to take time, but the intention of the government is positive, and they have very honest intention. So let's see. We are
Right. Absolutely, I agree with you. So the intention of the government is there to increase the tax efficiency, the tax collection,
yes,
without
yes,
further increase in tax rates. And I believe this is a very welcome step. And also it's a welcome step that they are moving towards digitization, towards faceless assessments, which actually also prevents corruption, which has been the problem of many corporates, whether foreign investors or everyone which is there. So that being the case, there are several questions which have come up. So I'm being selective in asking few questions to you. Obviously, I believe Rohan is your good friend, and so Rohan has invested in Bitcoin. So Rohan is concerned about the provision which has come in. So here the question which has come up is that, so what happens, this flat taxation which has been introduced by the government of India, and there is a restriction in carry forward of losses. So what are your views that will this provision stand the test of the courts? Will it be challenged, and will it be struck down by the courts?
my personal view is that in every budget there are certain provisions which taxpayer challenged, and in rarest of the rare cases, the taxpayer succeeds. And government has done this. I personally feel that government has done this experiment to taxing the crypto, and this is the first process. So I think gradually they will refine the provisions to, but now, as of now, this is the provision. You cannot set off. They are treating it like winning, and they are treating it as
But
special.
will it be challenged? But if it is challenged in the court, will this provision be struck down by the courts?
No,
Or
no.
will it
I
be
personally
still upheld?
believe no, no.
Yeah.
This it is like a winning of like आप कौन बनेगा करोड़पति में आप गए, आपको 1 करोड़ रुपया आपने जीता, आपको 30% टैक्स देना है. They are treating you this income from Bitcoin like that only.
Yeah, in fact, that's a very fair. So I believe in the past years as well, government had restricted carry forward of losses on horse property as well. And
Yes,
that
yes.
provision could not be struck down by the courts. I believe this is also something which is well within the domain of the legislature and the parliament,
yes.
therefore it cannot be overruled. So I agree with you that this will be defendable in the courts of law and the government will be there. Another question which has come up and which is rightly so, and that was also there, which is something which was there in my mind as well, is that the retrospective amendment, we all agreed that the retrospective amendment is not something which should the order of the day, but however, the retrospective amendments have been made, and one such retrospective amendment is to disallow the expenditure for if cesses and surcharges are charged off in your financial statements. So this would lead to undue hardship, and this is essentially because of the fact that this is they have clarified this to be a tax, right? Now, what are your views on it, on this? That is it not unfair on part of the government, and will it not lead to more hardship on the taxpayers?
No, any kind of retrospective amendment is not welcomed. So I am totally against any kind of retrospective amendment. But so far as this particular item is concerned, taxes, so I personally believe from day one, it is income tax. If it is say surcharge, it is income tax. And you should interpret it like that it is an income tax and you should not claim it. So government is very late to bring this amendment. But I think now if anyone is having any problem, they can again go to court and then
Yeah.
so it is a long
Right.
process.
Right. So, friends, essentially, this is the point. The case in point is that it is what it is. It's the law of land, and cess and surcharge has been essentially disallowed because of cess and surcharge. Most of the corporates were having in indirect taxes. They were charging it off because in the service tax era that was not being allowed to carry forward. So that is why the governments have come up and has clarified this. And there was another clarification which one of our members wanted, that cost of acquisition of cryptocurrency. Yes, that will be allowed as an deduction.
Yes.
That's,
They
will be allowed as a deduction. Yeah.
they have written specifically.
Yeah, so it will be allowed as a deduction. And on 14A, the question which has come up is that will it be, if there is nothing, will it be, if there is no exempt income, will that section still apply? I believe the answer to that is also yes, friends.
Yes.
That's the exact reason why this has been brought in. So very quickly, because is the amendment, this has been brought in by way of an explanation to the section. So very quickly, is this amendment retrospective in nature or is it prospective?
So there is certain ambiguity in it. So in the memorandum, they have written that it will apply from 1st April 2022. But the language they have written, the meaning of this is from the beginning. So,
Absolutely.
So there are certain confusions. So it is again subject to litigation. And
Yeah, no, I hope there is the government, the way the government is functioning, I hope that the government will be issuing a clarification to clear the doubts instead of inviting unnecessary litigation. So thank you so much, Bikash. Thanks for
Hello.
the members.
Hello.
Yeah.
Yeah, I have a question. So under section 14A, you said the disallowance of expenditure will still be there. But again, you said that the disallowance amount cannot exceed the income, right? So if there is no income, then what amount will be disallowed?
there is rule 8DD. So in the 49, they have given a formula, rule 8DD. So that disallowance shall be calculated as per rule 8DD.
That's some average of opening and closing assets,
Yes,
right?
yes.
So as per the rule, suppose the amount is coming, some huge amount is coming. Suppose
Yes.
some 10 crore amount is coming, but against that there is no income, exempt income. In that case, means will it be considered as leakage of tax?
No,
using that.
As per this amendment, it will be treated as disallowance. Due to this reason only, this amendment has come. So if you have any grievances, you can file appeal, tribunal, high court, and you can go to Supreme Court, and and this litigation is never ending.
Okay. So to conclude, it will be any amount will be allowed as deduction, but that has to be as per the rule 8DD.
Yes, yes, yes.
Okay. Okay.
We have faced similar type of problem in one of my client. There was no any trading during the year, no any dealing during the year. Only opening and closing was there full year. So it was around 5 crore something was there. So they had made that calculation and they had disallowed the simply they had disallowed the figure.
So now as per the amended, so you have the leeway that as per the memorandum, it is written that it will apply from 1st April 2022. So if your transaction is before that, you can claim, you can challenge it by way of earlier favorable decisions. But if this transaction is on or after 1st April 2022, then they are not going to spare you. If your transaction is before 1st April 2022, you can still take the reference of the earlier favorable High Court decisions.
So thanks so much, Bikash. I think this is very well understood, and thank you everybody for being so participative and asking the questions. So I would like to now invite my next guest and speaker, our Honorable Mr. Narendra Pati, who needs no introduction and has already been introduced by Rohan. So without further undue delay, Mr. Pati, if you could just start your presentation.
Thank you, Bikash. And thank you both the Bikash. Bikash Bogi having made a very nice presentation and setting the tone. In fact, it makes me more comfortable. Initially, I was thinking whenever we speak, we first think about the audience, what they will like to listen. Because there are many levels in a taxation that you can talk about. Whether you have to go deep, sections, legal, or economics. So when looking at the interactions that happen with Bikash, I feel more comfortable. I'll start with my presentations. Hope my screen is visible now.
Yes, it is.
So I'll start with this stanza from Gita's Parasparam Bhavantya Sreya Paramastya. It means that when we support each other, we attain the God. Means we get the goodness of the God. So here in the Gitanjali Express, we have been supporting each other. I start with this goodness quotes from the Gita. Now, just give me. So in a last discussion that happened with Bikash, that about this, retrospective amendment, tax collection dues. So starting from there, this my boy means that GST or the indirect tax is most pampered one as of now. As we all know, the last month collections was 140 lakhs, 1.4 lakhs crore. So this was correctly estimated by the government. And if you see the trend, last 2-3 years, they are seeing a substantial increase in the revenue, and they're not tempering the law. So the main structure lies as it is, and nothing major has taken place. It is when the GST was brought in, there were two things that was in the mind of the government. The first one was the government thought of facilitating a ease of doing business where all old laws were merged into one, so that you don't have the teeth of all these laws striking into each other. That has been successfully attained. And the second one is that also, the fraud prevention mechanism. This was in the one of the very primary also purpose of this GST. That is also serving the purpose. As we know, a lot of this, bogus invoicing and is being caught now. And with this background, government is happy, and they have not tempered, but they have For the credit portion, it is all about credits. Little tightening, little fraud prevention, preventive method they have included. And when we go to customs, we will see that a lot of ease of doing business things has been propagated through this budget proposal. The first one is a input tax credit. In here there are some facilitations only. The first one, earlier any credit you can avail up to September. Basically, I'm put it as simple language instead of going in the legal language. By September of the next financial year, you can claim the credit. Now they have extended for 2 more months, October and November. The reason being, when your audits takes place, your tax audit, even GST audit, that GST 99C annual returns, you come out with some normally a lot of mismatch or some other issues come up. Then you pay the tax and you file the returns also. Now this will now available for credit to the other party, the recipient of the goods and services. So the 2 months after annual return or tax audits, income tax audit and all that, now is a facilitation. Similar provision also has been done in return filing that we will come in the next point. So even credit notes, suppose there is a invoice you want to change, a value you want to change, that is also can be done now after 2 months extension. From September, it has now become November. Same thing also, any rectification of error in the returns, you have 2 more months. So this is a completely facilitations. Now, there is a what I say, little restrictive provision has been brought, 16.2 BA, where they are saying that you will have to now dispel with the credit for any restriction put by the government on the supplier side. So this is something new. Whenever you are getting a goods or services from a supplier, if there is a restriction on the supplier, then you will not be eligible to take credit, and this will be given to you in your input tax credit forms. That is in your, it is called GSTR 2B. So these are the restrictions that will be there. A new registered person for a period of time, if there is a new registered person, they may not allow you. Your supplier, we are talking about now, these are the suppliers. The second is if the supplier has defaulted of tax payment, if the taxpayer has made some short payment of tax, if the supplier has availed extra credit, then he is supposed to take. If this is a very important, we'll come back to you. There is a new restriction that they have put. So if the supplier is taking more credit than they are supposed to take. Now, as we know, we cannot pay any tax out of credit 100%. And there are exemptions to this. But now they have hammered this. If there is a restriction on the supplier to avail credit, and if there is avail credit, then the recipient of service or goods, you will not be eligible for that credit. And this will be communicated in the GSTR 2B. Any other, then there will be another provision has been kept for future declaration by the government for the classification of other suppliers. Now, earlier, when the matching concept is a very important point, almost all of us may be knowing, whoever is dealing with GST, that now we can take credits. We used to take credits of the matched invoices. Matched invoices means whatever credit we have taken, the vendor who has supplied to us should have filed the return, and it should have been visible to us in our record. That is called GSTR 2B as of now. It should be visible and it should be matched. And we were taking 5% extra, whatever not matched also. From 1st January 2022, another section 16.2 AA has been incorporated, and there was complete restriction. It says that you can take credit only when the invoices you are taking has been reported by the vendor and it is appearing in your GSTR 2B. Now another so what now they have told that you cannot take any provisional assessment, and the people were facing problems. Today, some invoices uh, is has been reported, but I have not paid to the vendor. Sorry, the vendor has not paid tax or he has not filed return. So we were now after that it was lost. When subsequently it does, it was not coming into my kitty. I was not able to take credit for subsequent payment by the vendor, tax payment by the vendor. Now they have facilitated that you can avail the credit once the suppliers makes the payment. Now another facilitation has been done, given that the credit, if somebody having multiple GST number, particularly in different states, it could be within the states also. The case ledger means the tax payment if you have done, if it is lying in your case ledger, you can transfer from one unit to another. So that is a good one. Earlier people were filing refund claim. So that is important. Now another way is, this is what I was telling. This is a very draconian step the government may take in future. Section 49(12), which now with a provision, they are trying to empower the government to recommend maximum liability that you can be paid through ITC. So today 99%. Now in future they can put any percentage. So this is a empowering section. Now another is levy of interest on wrongdoings. This if wrong ITC, sorry. So if there was any wrong ITC taken, now the interest was being charged. Under service tax, there were a lot of judgments. Here, court it went to court, and court finally told that once if you have avail credit, then the interest liability doesn't comes. But only when it comes, the interest liability come if you have used the credit. So I'm sure we all know what is availment and utilizations, but for the clarity, at the cost of repetitions, I will tell it again that credit ITC means when we take a credit in our books of accounts or in our tax records. So the money comes and lie in our tax bucket, the GST portal. And then we are supposed to, if there is a tax liability, we are supposed to take out from there and pay, discharge the tax liability. That is called utilizations. So the under service tax, it was clear with the subsequent amendment as well as court judgments that only when you have used the credit for payment of tax and there is a requirement to reverse the credit, you are supposed to pay interest. This was missing in GST. Now they have brought in saying that if you have not used the credit for tax payment, then no interest liability will come. Now refund claim, now there are some changes in the refund claims. This is very important changes they have made. Now, what was happening that if there is a somebody has just made a challan payment without appropriating the tax payment into any tax liability, it goes and lies in the case ledger basket. That if for any reason one is to take back the money, earlier there was no applications systems. It was supposed to be through the normal monthly returns, but that has been done away with. They have facilitated with a application systems. So now if there is any money that has been paid by mistake or for whatever reason, one can claim back with a applications. Now the time limit for refund applications has been increased for 2 years for specified category. This is specified agencies means that UN, particularly the foreign embassy and all, who are not supposed to pay tax. If somebody charging to them, they can avail credit. And now is earlier it was restricted to 6 months within which they are supposed to file a refund claim. Now it is 2 years. Now another important changes. This is also a little dangerous. If there is a refund claim, it also happens in income tax. now refund is allowed. But if there is a tax liability, then the refund, once it is granted, it gets adjusted with the tax liability. Now that was limited, this adjustment or withholding of refund already granted was restricted to these exports or inverted duty structure. Now they have enlarged the scope, and now each and every case, every type of refund will get covered here. So if there is any barring these two, suppose there is some wrong assessment, wrong self-assessment or higher rate applied, or whatever reason, if there is a refund arising, then there is a danger of withholding of the refund if there is tax dues in earlier, previous or subsequent. And this now for SEZ, now if there is a SEZ, somebody charge the tax to them, they are supposed to claim refund. This time now has been, changed. The time of refund claim has been, relevant date has been changed. Now this is the date of furnishing or return by the SEZ. This is also a facilitation scheme. Now late fee. Now late fee for TCS return, if there is tax collection, this is basically for e-commerce operator. They are supposed to collect taxes and pay to the government. So there will be late fee for if they are filing their returns. Earlier it was not there. So now this 10 points, when the GST started, it was there was a very elaborate law that was made that every supplier will be filing their returns. It will be communicated to the recipient of goods and services, to the buyer through the GST portal. Then the buyer, when taking credit, they have to see the statement that will come from the supplier, and they can amend, delete, add, and then file returns of ITC. Now that those elaborate section has been done away with, now it is simplified that GSTR 2B. So this is a mostly it is happening today, but for clarity in the law, they have removed all these things. Now cancellation of registrations. Now the if there is tax not paid by someone, the tax officer can cancel the registration. There are two categories they have to. If it is a composition taxpayer, where it is, you are supposed to file only annual returns. In annual returns, then if you are not filing annual return within 3 months of the due date, then your registration is liable to be cancelled. Similar, and for non-composition dealer, then if you fail to file continuous, some continuous tax period which has to be yet to be notified, now it will be cancelled. Earlier, for non-composition taxpayers, it was 6 months was the timeline. Now due date for GSTR 5. This is for non-resident taxpayers. Non-resident taxpayers means persons who are not present in a particular state. It is not outside India or inside India. It is that in particular state you are doing an event or something, you don't have a presence in that state, you can take a non-resident taxpayers registrations. Now that return filing has been preponed from 20th to 13th. Okay, now I'm going into customs. There has not been too many changes in the GST. Now in customs, there are again mostly facilitations, but there are also some revenue collections measures that has been incorporated in the proposed law. First one is, that import tariff rationalization. Many tariff has now been rationalized, and mostly to support Make in India and Atmanirbhar Bharat, where if if you are importing the materials, the rate has been increased to comparatively, so that you go into manufacturing. gradual phasing out of concessional duty under project import scheme. If we all know, project import schemes means, these all, whenever there is a project, many things will come in. Suppose there is a power plant, there'll be machineries, there could be, parts, there could be raw material, many things will come from abroad, and every item is supposed to attract tax at its own rate. But there is a project import schemes under which all get classified under a single custom tariff, and they are taxed under that tariff. And many of the projects are notified for exemptions. So that facilities now is slowly they are trying to take it out. We will see that now they have put that there will be no exemption full-fledged. These are all mostly capital goods. So they will be now charged at a minimum tax of 7.5%. So that is one tax collection measure that hamper all of us. And they have also clarified that this is just a clarification. Social welfare charges will not be there if custom duty is not there. As we know, surcharge is mostly charged on the tax. If there is no tax, means no custom duty, where is the question of surcharge? This issue came up in few judgments, earlier court cases. Basically, when you import some material and you pay the custom duty through the foreign trade policy, that scripts, incentive schemes, MEIS, SEIS, that script you get, then you don't really pay the custom duty. So there were demand of social welfare surcharge in such cases where the custom duty is not being paid directly, but then it was being paid through that SEIS script. A lot of debate happened to differentiate between levy and collections. I am not going into those all details. Now they have told that if custom duty is not paid, then social welfare surcharge also is not to be levied. This was 10% on the custom duty, which is now a clarification. Now the fourth issue here is a very interesting thing. It's a technical, but this DRI means our revenue intelligence, which where they are the most draconian investigating agencies. Mostly they do for customs and smuggling investigations. What they do is they investigate and then they issue a show cause notice. Now recently 3-4 judgments came where it was one of the most important is Canon India judgments, where the notice were scrapped, the text demand was scrapped, saying that DRI officers are not, the proper officer to issue a show cause notice. It's highly a technical matter, but then yes, a lot of corporates got the benefit. Many show cause notices were scrapped. This also has to do with some earlier judgments where a lot of audit notices were scrapped. Then this special valuation branch also matter where dispense with. That is that we will do. I have a separate slide on all this. Now advance ruling. Now they have limited it to 3 years. Either 3 years or until the law change or the fact change. So this was earlier unlimited. So now today under custom, if you have taken an advance ruling, after 3 years, you have to supposed to apply again. This is again make it difficult for the people. Same thing happened under special valuation branch also. If there was a SBB order, prior to 2016, it was unlimited. Means that that special valuation order was supposed to continue without any time limit. But in 2016, they brought a time limit of 3 years. Same thing now they have brought into the advance ruling. Now SEZ, we all know this is a subject that is slowly, has passed through many ups and downs in these legislations, in the MAT provisions and all that. So now it has lost its significance in many ways, but still the government wants to now change the entire regulations, and a new regulations will be brought in. That has been proposed. Another important, this is also technical, that if there is a, see, this is very important also. Earlier, if there is any valuation, any type of issues at the time of import, then people used to get a show cause notice. Now, what was happening for particularly for valuations? If the officer is not agree, he will simply issue a show cause notice. They will reject your valuations and ask for a different method of valuations and additional tax payment. Now, there were this has now been, there was a court judgment which says that the valuation declared in the note, in the bill of entry at the time of import cannot just be scrapped, and you cannot demand with a fresh you cannot impose a fresh valuation just because you can do it. You should the provision allow you to change the valuation or reject the valuation of the importer only when there is a reason to doubt, not reason to believe. That is as per the provisions rule 12 that has been earlier that was there. Now they have amended the section and they have imposed these new obligations. They have kept a provisions where you can they will ask additional obligations, additional informations, and this will enable them to create a situation for reason to doubt. Now, this proper officer that that DRI, this is purely technical, and that too they have now changed the rules. So I don't think we need to go through this more in details. Now I have come to mostly the tariff area where the rates have changed. So this is as we there are some addition of specified goods for duty-free imports. Items like handicraft, apparel, leather goods has been added. And for exporter, if you are an exporter of these goods, if you are importing these, then you can import it duty-free and you have to export within 6 months. So this number of item has been increased with this. Edging out of the exemption, this has been in the plate of the government for the last almost 4 or 5 years. They have slowly reducing. They have reduced this time almost 350 exemptions, and on certain, this includes your agricultural produce, chemicals, fabrics, medical devices, drugs, and medicines. And anti-dumping duty also has been removed, and for mostly steel items, and that too from Brazil, China, and Germany. So very specific product, and other aluminum and other zinc product from China, Vietnam, and Korea. Similarly, after anti-dumping, this countervailing duty also has been removed from steel products. And this is from China only, they have removed. Project import we discuss. Now all project imports will attract 7.5% BCD. There were many exemption earlier. This special economic zone also we discussed that they are going to change this one, and this is now automated completely. They in power sector they have brought in this 13 item. They have removed the BCD, concessional BCD. This is very specific product. There are many changes on tariff, frozen mussel, frozen quicks. There are very specific items on which this has been changed, rationalized mostly. And solar sector also there has been changes, and you see they have increased the rates. So one is to be now, if solar any venture somebody is thinking of, then one should look at this before this 31st March. They have brought this exemption to parts of umbrella. This is again MSME sector. Few items they have brought in some exemptions, very limited. Gems and jewelry, Now it will be now rates are got to 5%, and the second line item under gems and jewelry also very interesting. There were a lot of different rates applicable. Now they have done it for 400 rupees per kg. So this will stop smuggling. Is what I understand. And they have reduced duty on chemicals of the very specific. One is to look at the exact tariff heading and the material to look at whether this reduction applies to them. Similarly, the duty also has been increased on some of the items, chemicals. This is now government wants to on fuel wants to increase this blended fuel. So on blended fuel, excise duty, if we know the fuel is still under central excise duty, now they have increased the excise duty on blended fuel to increase by 2 rupees. So this is, and from effective 1st October 2022, it means the government wants to promote blended fuel. And the DGFT news that I mentioned is not a part of a budget, but it has come in the last 2 days. At the MEIS, SEIS, that submitting applications now has been extended to February 28. This DGFT things has come because the portal was showing a lot of error. Many issues were there. So this background they have. Thank you, everyone. I would like to take any questions.
Sure, Narendra. So thank you so much for the presentation. It was indeed very enriching, and I'm sure the members would have found it very useful. Just to friends, let you know that is while we are more concerned about the direct taxes, it's the indirect taxes which are affecting all of us in our day-to-day lives, and therefore that becomes very relevant. So, Narendra, before we go to the questions, a general comment in that while people would think that there are not many changes which are there, but the changes which have been there are very subtle. How do you think, is it going to impact the taxpayers in a negative fashion, especially in relation to GST changes?
I will say this is mostly, they have clarificatory in nature, and in this input tax credit, they are bringing some restriction, and mostly fraud preventive. So for genuine taxpayer, as on today, there will not be much impact. If there is a fraudulent supply, now all this mechanism, many of the tax provision is directed towards that.
So from the I understand that, but if you ask from the corporate perspective, there are several members among us who are CFOs in various corporates, and the rules which have been brought in are not something which encourages the CFOs and the MDs who are listening to you on this call, especially because of the fact that they are restricting the credits to whatever is appearing in 2B. The government has also gone ahead and said that if the taxes are not paid, then also the credits are not going to be available to you as a corporate. So therefore, for all the corporates, and therefore for then it becomes very essential for them to make a wise decision, right? So do you not think this would be something which will be an area which the corporate should be looking at?
So if we remember our days of 26 AS, initially, it was a havoc for everyone, but now it has streamlined to many extent. And this is a very basic design of the GST. A government wants to do it, and it will happen if there is no fraud invoicing, and if taxpayer compliance increases. It is going to be smoothed in very recent times. See, already 5% restriction last 1 year. So 5% they have removed. So it is a matter of, setting up a mechanism for comparison. All things are otherwise directly there will be no impact on a particular corporate, because if your vendor is not paying, you have to catch the vendor.
So-
And see, I understand there were a Madras High Court judgment in the matter of DY Beetle. So there were many judgment in fact. So which says that Madras Beetle judgment says that you cannot force on a recipient of goods and service who is claiming ITC.
Absolutely.
You should
Absolutely.
catch the person who is supplied who has not paid tax. But
So
there is
effectively, the government has negated that judgment.
correct. So
That makes life tougher. That makes life tougher for all the corporates, for the CFOs and the MDs who are there on the call and listening very patiently to you. So therefore, what would be your advice to them? That because that judgment becomes negated, so the life becomes even more tougher. So while on one hand, it is going to probably the MSME is the one who's going to bear the brunt if they don't comply with the provisions of land and they're not filing their returns and paying the taxes on time. What would be your advice to the people in business, in corporates?
they should attack this problem two ways. One is they should put a robust system in the IT systems to know the defaulter immediately, matching systems. Second, they should evaluate their vendors properly. They should take proper vendor if there is. So both combined together, I think this can be the problem can be avoided.
Right. I think that's a very sensible advice. So I believe most the message which is coming out loud and clear is that all the people must reevaluate the system which they are following currently, especially while dealing with vendors, and maybe not vendors in A category, but probably one which are either unregistered or either in the B or C category, which is there. Another interesting and relief measure which has been brought in by government, and obviously it was only logical to do that, and there were several representations which were made, was to extend the availment of ITC to 30th November, which is a logical date for filing of returns. So one of the questions which has come up is that GSTR 9 is then filed on 31st of December. So that leaves a very little time for to file the GSTR 9. So do you anticipate that there's going to be an increase in date for filing of GSTR 9 as well?
No, not really. So the system is that you do a evaluation at the time of GSTR 9. So this is not even just GST. We are talking about the statutory audit, the income tax audit all together. So what they have given that any error if you find, then they are giving a window of 2 months to rectify. If they change GSTR 9, the purpose will be defeated. So I personally don't look at a situation that government will extend the dates.
Right. While the government has done a good job and the collections are also increasing, and they are tightening the knobs by introducing more and more provisions, like for example the interest provision.
Because your voice is not coming.
Are you able to hear me, Narendra?
No, we are not able to hear you.
Voice is very low, Bikash ji. Suddenly it went down.
Oh, is it better now, or is it?
Yeah, better.
Apologies for that. So the point which I was asking you, another question which I was trying to ask you is one of the major provisions, one of the important provisions which you have mentioned is that the restriction in credits, which the government is planning to introduce. While there has been a very buoyant tax collection, why would they introduce such a provision, which was something which was, if you recall, in the VAT days, Bengal government and the Bihar government used to resort to?
Pardon, I missed the question. So I understand, but today, if you see, except fraud preventive, there are some future enabling provision. But today there is no extra, reduction of the ITC. I have not seen that they restricted nothing as of now, but they have kept an enabling provision for future.
So you don't see that as a concern that the taxpayers will be forced to pay more in cash than in utilization of credits, because that's going to defeat the entire purpose of GST, why GST was brought in.
So ideally, the entire scenario will change subject to the 2-3 products that is outside this GST, petroleum products. How other people, how the central and state governments are able to gel with each other and come out with a solutions. Ultimately, the infrastructure spending of the government, as you know, this time they have increased it by 35%. So from somewhere they will fund it. So today they have kept an enabling provision. If they fail somewhere, then they will do it. But today, luckily for all of us, nothing that sort of things has been done.
So while the government is encouraging more capex spend, the question which is coming from most of our members out here is, when will they allow the refund of credits on capex spends? That is something which is a long pending demand of the industry.
Understand. So this was not there in earlier. State government also will not be there. There was a difference. The central government was interested. When the GST law came up, only the state governments were not ready for this. If you may be knowing that VAT regime, a lot of state was having restriction on the capital goods, but central government, they were giving credits and refund. So this is to do with a tussle between central and state government, and I don't think it will come up in recent times. Simply because every government is now revenue concerned. So
yeah, so that's probably bad news for many people in the who are going for rapid capex expansion, and there may be some mismatches in the duty structure. So while there was a very interesting, the budget also was for Atmanirbhar Bharat, and there was a push for more spending in capitalization, and we are looking at a very buoyant economy, and people are very buoyant up. The industries is also buoyant up. And what do you think that the reduction in customs duty or the increase in customs duty, which they have gradually said in respect of capex goods, or taking away of the deductions, will that be helpful for the economy in general? And the
India has been facing a problem at the WTO, for these exemptions and all these export benefits, EPCG scheme, SEIS schemes, MEIS schemes. So the exemptions are supposed to go away, and it is not WTO compliant. So in recent times, we have seen 2 changes, like this road tab they have brought in, and then SEIS also they have done away with. So this is to make it WTO compliant. These extra exemptions will go. They will simplify. We are seeing recently rationalization of the tax rates as well as reducing the exemption. This is also will contribute to the simplification of the tax laws.
Yeah, and that should also encourage more domestic manufacturing, right?
Yeah.
Fine. It was certainly a pleasure listening to you, Narendra, and very enriching. Thank you so much for it. And may I request Ms. Pinking Kedia, if there are no further questions from our members, to give a vote of thanks to both our speakers on behalf of Gitanjali.
First of all, happy Saraswati Puja to all. We person from Calcutta miss the Saraswati Puja here. So on the auspicious occasion of the Saraswati Puja, it is like a prasad of Ma to hear our learned speakers, CA Bikash Bogi and CA Narendra Pati. And Vikashji, thank you for giving me this pleasant task to propose well-deserved vote of thanks to both the speaker. Both the speakers, CA Vikas and CA Narendra, gave insight of direct tax provisions and indirect tax provision in proposed finance bill in very lucid manner. And they covered all clauses in their presentation and answered all the queries with patience and with very simple explanation. Also, CA Vikasji, Khannaji moderated the session very well. So I, on behalf of Gitanjali Express, propose a hearty vote of thanks to today's speakers, C. Bikash Bogi and C. Narendra Pati, and moderator Bikash Kanaji. So, and request you all with a good round of applause. And I, on behalf of Gitanjali Express, want to thank all the participants for attending today's webinar and motivate us to do more webinars in the future. Thank you. Thank you.
Thanks a lot. Thank you for the kind words.
Thank you.
Yes.
Thank you for the kind words.
Neeraj, would you like to add a few words here?
I think well done, Vikas and Narendra and Vikas Khanna. So I think good job done, and I think we are setting the bar high. So I'm sure we will continue to deliver to the members. Thank you.
Absolutely. Unquestionably, I think the current management committee and the core committee is doing a fabulous job, and they have been regularly conducting the sessions. So a big thank you to our panel out here and to all the managing committee members. And we are looking forward to more such sessions and more participation from our members, which will only encourage us to do much better. Thank you so much, guys, and have a great weekend. Bye.
Thank you. Thank you. Have a nice weekend.